We're streaming. Just gotta turn on here.
I'll call the February 19th financial review meeting to order, and we'll dispense with the formalities and go right into the meeting. Is there anyone wish to amend or question the agenda at this time?
Not for me. I'll
Not for
recommend that
me.
we approve the agenda as presented.
I will second that motion. Further discussion at all?
No.
Call for the vote. All in favor, signify by saying aye.
Aye.
Motion carries. Okay, I'm going to hand it over to our manager and our accountant to go over the financial review.
Okay, so this is a quarterly review to see the year-to-date expenses and revenues to ensure the township is on track for the 2026 budget year. However, this meeting specifically will be to review the year-end expenses and revenues for 2025. Beginning with 2025 total revenues, year-to-end is $3,984,986.43, which is 3.98% less than what the township budgeted. The township budgeted $4,150,101. Does anyone have any questions in regards to the revenues?
No, not specifically.
Okay. And then into 2025 expenses, they were budgeted at $4,933,184.13, and the year end is $4,390,898.36. That does include the street sweeper purchase. In total, that was about 89% of the budget. The biggest expenditure was the street sweeper, and without that, the township was in line with the budget. And I mean, we even spent under what we budgeted. Please be aware that the auditors are actively conducting their audit and have not provided us with adjusting entries, which could affect year-end numbers, but we don't expect anything material to make changes to. And then the next, does anyone have any questions about the expenses?
I think I just want to reinforce the fact that, we budgeted $4.9 million, we spent $4.4, $500,000 under what we had anticipated, which to me, shows the focus that our township staff and personnel have on, trying to save money over time.
Very well said.
Okay. Is there any more comments on expenses? Seeing none, I'm going to move on to the principal loan balance. The initial principal loan balance was $950,001, and with the current principal balance of $838,158.48, by the end of December the 31st, the principal loan was paid in the amount of $111,842.52. Only interest was paid prior to the end of 2024, and then the principal and interest payments began at the start of 2025. The purpose of the loan was to allow the township to keep a 40% operating reserve in cash for an emergency event, natural disaster, or other unforeseen major expense. The money market account that the township opened for getting a lower loan interest rate is where the loan was directly placed and has earned $39,362.99. The interest paid on the loan thus far is $54,804.60. Therefore, the money market interest earnings have offset $15,441.61 in interest. Do I have any comments or questions about that?
No.
I do. I just want to explain to everyone out there listening in the streaming platform the natural disaster. If we do have a natural disaster come through the township, we have to upfront those costs to replace bridges, roads washed out, that sort of thing. The state and the government, federal government, will reimburse us, but it takes time. So that's why we need a 40% in our reserves to help pay for that, so that we're not caught with all that cost and nothing to back us up with. Is that right, Mr. Roads Director?
That's correct.
So it takes months.
Absolutely.
It could actually
Yes.
take years.
Sometimes, depending, yeah.
Okay, so I just wanted to explain to everyone, that's why we always are discussing about the 40% in operating reserve cash. It's a solid financial insurance, I feel.
Right.
Okay.
Agreed.
So moving on from that, we can get into, if you, want to talk about paying extra on the loan balance or putting money into the capital reserve fund. It's up to you guys.
I think looking at 2025, just the fact that our revenues were short of our expenses by about $400,000, and that gets back to we paid for the street sweeping. Okay. I think the only way to take things down further is to check, the cash reserves that we have, and make sure that if we're north of that 40% for our budgeted expenses for '26, that to me would be a calculation we should look at and see. So simple numbers that we came up and said 40% of 2026 budget is, just making numbers up, 2 million, and we're sitting on 2.2 million in cash. Do we take 200,000 and push that towards principal of the loan?
I believe I have those calculations on I call it the blue budget now.
Okay.
The one we finalized with all the things on it, but it's not in the printable full view. I have it underneath in the calculations, so I should be able to give you those numbers.
Great.
So once we get those numbers, Mr. Core, I know we want to pay off the loan as soon as humanly possible, and I was all for that. However, there are some things that are coming up, such as, and I was going to bring this up in comments, but I'll bring it up now. Now's the right time. The recreation fund. Sooner or later, we're going to see at the light at the end of the tunnel where we are not going to be receiving any bluebirds, what we call bluebird, tax transfers. And that's usually we collect recreation fees from new development coming in, and that's what seeds our recreation fee. I foresee that not growing at all in the future.
Agree.
So we have to think about how are we going to keep that fund alive and growing throughout the years for other generations to come, other supervisors and that sort of thing coming on the board. I think that's prudent for us to do that. IT expenses are going to probably, I hope they don't blow up in our face, but with today's day and age, IT security is going to be the next hot thing. So we're going to have that expense, not to mention the legal expenses when we go forward with the remaining few developments that we have coming.
And I concur with that. I think taking that simple example, and then factoring in the items and possible future needs, I would agree that you just don't push all 200K into the principal. The other thing we talked about too was setting up a capital fund where we could put things in. It would give us, be a way to build up another reserve of cash, but give us flexibility for things too, such as capital expenditures, could potentially seed things like the rec fund if there was something there, or unforeseen legal fees if some other, ordinance effort like the data centers came about.
Correct. Your capital needs are mainly equipment, and our roads director is going to need equipment. So we have that proverbial 200,000 is going to be split in many, many pieces.
Oh yeah, everyone wants a piece of the pie, but
Yep, we're realists.
but But I do agree that that's the calculation, and then if there is excess, it's a function of where does it go? And in principle, I agree that we don't push it all towards the loan, because doing so, I don't think would be prudent.
But we do have to pay off the loan.
Oh, yeah, and we are making our scheduled payments. We would like to pay it off faster.
Yes.
If they're sufficient. So if we go back to, you know, the Bluebird, if one of the warehouses that's coming on the development front ultimately gets built and then subsequently gets sold, as they tend to, that may land a couple $100,000 extra in our lap.
Mhm.
And then that, you know, could be divvied up in a couple of ways, towards loan principal, maybe adding more into the rec fund or whatnot. But again, that's where I kind of like this structure that was being discussed about this capital fund. It's not just capital. That's what we called it,
Yeah.
but it gives us flexibility based on some things that may be unforeseen when we budget something.
I just wanted to bring up those items that we have to be cognizant of, that we just don't focus on the loan. We have to remain focused on the loan, which we are. We are paying our payments. But the loan gives us some flexibility that we can pad some other areas of our savings, so to speak. I'm sorry, I rambled, go ahead.
Oh, no, you're good. The next thing I was coming into was what would the board like to see at the next financial review meeting, which will be April 30th at 2 p.m. here. Right now, I have written down, you know, the calculation to determine, you know, what is the excess amount of funds we could use, whether it's for the loan payment, you know, capital reserve, the rec fund, et cetera. You know, but what else would you like to see?
Obviously, the audited financials should be done by then. We should bring that up. Will that be enough time, Jim, to have the first quarter 26 financials done?
Yeah. Mm-hmm. Yeah.
Because then that'll give us a pretty good picture, because, knock on wood, hopefully,
Yeah.
snow season's done by that time.
Yeah, it's kind of weird because we're having the first one in February when the end of the quarter isn't until March, and then we're gonna have the next one in April when the end of the quarter's not till June, so it's kind of,
Well, the reason
we have to kind of off
no,
whack
but,
this year.
but the reason we did that is
Yeah.
looking back. This
Yeah.
one was focused on 2025.
Mm-hmm,
The
yes.
April will be focused on the first quarter of
Yep.
26. Plus,
Mhm.
if the audit will be done, barring anything unforeseen, and we'll be able to share that.
Yeah.
I mean, we'll share it with the public as soon as we can. And then, so what we're always doing is the meetings are falling right after the quarter, because then the one after April was August?
July.
Mhm.
July, sorry, yeah,
Mhm.
it's June, sorry. And so forth, so at least gets there, yes, sir.
Jen, let me know before that comes out. We can technically still order salt the whole way to August.
Okay,
The only purpose of that is to fill that bin for the following year.
no, I understand.
So let me know and I'll have that bin full. You know, sometimes we just let it go for a little while before we call for
Well,
salt.
it doesn't necessarily have to be full, it's a function of, you know, snow season's over, I get, if there's,
No, but then we have the correct numbers. Hey, here's what I spent and we're done.
that's
Does
fine,
that
you don't
make
have to
sense
spend it.
for that
I-
next review?
You don't have to spend it early is what I'm saying. So
Right.
if, for example, I'm again making up a number because I don't have it in front of me. If, let's say, April, we're like, hey, we spent $30,000 of a $50,000 budget for salt.
Mhm.
Well, okay, I'm gonna use that remaining 20 to preload my stuff. By August, I'll have it.
Right,
Because you probably get some better pricing too later in the year.
same price.
Oh, that's right. you
Yeah, it's a
negotiate it.
contract.
So it just all depends when we get
It's just a
around
cash
to it.
flow issue. Me, I would sooner hold on to the cash till August than get rid of it in case some weird storm comes flying through.
Yeah, yeah.
But again, to me, those monies are already earmarked, budgeted for that,
Right.
barring anything else unforeseen.
Okay.
So it's not like it's gonna go away, so.
Oh, no, I understand that, but just trying to make the numbers look better. Doesn't matter. All right.
So
Yeah,
now to mention salt, Shane, I'm concerned, I'm opposite of what Dean's saying about saving the money and leaving the salt bin go. A salt in the bin to me is money in the bank. I mean, with availability
Correct, it's
being,
there, yes.
being up and down.
Yeah.
Okay.
So, we can hit a happy medium there, but you gotta buy salt when you can buy salt when it's available. Who knows what next winter's gonna bring?
Oh, yeah, I understand that, and who knows what we have left, like, after this storm this weekend, we might not have none, so it'd be full, no matter
Okay.
what, so, it just depends how they fall, so.
I just, the way you said it, I just wouldn't, pre-spend it if we don't have to, but you make a valid point if there is that kind of ebb and flow of supply and demand.
Yeah.
I think that has happened before, too.
Yeah,
Like,
much
I
rather
remember
have
there
it
was a couple
slow.
years where you guys
Yeah.
had a lot, and then you guys had trouble getting it.
Yeah, a
Years,
lot of
and they
it's
had
the-
to get it from a different
A
supplier.
lot of it's the trucking.
remember.
It isn't that they always ran out of salt and stuff, but trying to get it here sometimes.
Yeah,
So,
yeah.
Gotcha.
All right.
So you have enough for this year, even if we do get snowmageddon this weekend?
Oh, absolutely. Oh,
There's
we
still-
met our,
Again.
we met our quota of 60%,
Okay.
but we didn't meet 100% of our quota yet. So,
The 60% is the minimum threshold you have
Minimum,
to take
yeah.
in order
And
to
we can
keep
go-
that pricing.
we can go up to 160 above that. So, yeah.
So I'm just going to reiterate the calculation, the audited financials, and the year-to-date first quarter. And is there anything else? Okay. Now, the audited financials, depending on when that does come out, if it makes it for the April Board of Supervisors meeting, I will have it on the agenda. We do a brief overview. He didn't tell us anything came up. He said we did pretty good, so I have good news. Otherwise, I can still bring it. It just depends on when it comes out.
That's fine.
And then, okay, so if nothing else, then, unless you guys have anything else to talk about, we can go into supervisors' comments if you'd like. It's up to you.
I can't think of anything else.
Yeah, I don't really have anything else. I just want to commend the staff for being cost conscious as they work through this stuff and always having that in back of mind as we work through things. Definitely appreciate it. And thanks for pulling the numbers together.
Are you guys okay with this? Like you too, Dean, you like the Excel ones. So when I was going through Peachtree, I found this other report and I thought I think I put it in the email to you guys. I thought this one showed a little bit more and I just made the numbers, formatted it as red so you guys could more easily see which ones were under, and it showed, from one year to the next, so you could easily see the numbers from one to the next.
That worked out very nice. Thank you.
Okay. What about you, Dave?
Yeah.
Were you all right with this?
What I'm concerned about is if you're happy with it.
Oh, I'm trying to make it easiest for you guys, so
Well,
Okay.
if
appreciate
you guys,
that, but
I just
think
thought this
I
one
mirrored-
showed more of the things, separated more.
I mirrored Dave's statement. It's got to be easy for you too. But
Well, like I said, this came from Peachtree, and I just dumped it into Excel and did a little bit of formatting and things on it.
sounds pretty straightforward then.
Okay, so yeah,
As long as it's working for you, and we already got the budget template set up, so I assume this can feed into that as
yes,
well. So,
yeah, I can just bring it over into a new, into that same
Yeah.
workbook.
No,
Yeah.
I think, I appreciate the work that you've done to kind of improve the process, so thank you.
I just want to reiterate what Dean said about staff doing all this work, coming into these financial reviews meetings, which have been fairly new to us in the last few years, which is a very healthy way of looking at our taxpayers' monies that we take care of. And staff did an excellent job. What you don't want to do as a supervisor coming in and hearing the manager or the accountant say, hey, we have a problem, which we don't hear that, and that's the good thing. Everything is online, we're doing well, we're trying to be transparent to everyone out there. It's your monies that we're working with, so we want to make sure we're transparent and diligent in what we spend and don't spend, and where we save your pennies. I just feel it's important in our financial meetings near the end, we have a forward-looking scope of things we want to do in the next few years, just not stay focused on 25 and 26, but we got to look out to 28. and we gotta, make sure our, legacy is forward, progressing. So, that's the message that I wanted to pass along, and thanks again to staff. That's all I have.
Okay. Thank you. Thank you for saying thank you.
Well, it's a lot of work, and I know you guys put a lot of work into this. And this takes, this demonstration, so to speak, of bringing us up to speed, Dean and I, and anyone out there watching, is beneficial. And I know it takes time out of your schedule, because time is precious to us, because we're wearing so many hats. And I appreciate that, so.
Thank you.
And is there any additional business to come before this?
No, no additional.
Okay, before we adjourn the meeting, I need to feel obligated to say that there's no residents in attendance today. It is a strange time to have a meeting 2:00 in the afternoon, but we do that for staff's reasonings and staff's purposes, so we can meet here while they're on their core hours, so to speak, and talk to us. So that's why we do it this way. Streaming makes it a little bit more palatable to me, because you can come in and look back at this meeting in the history of our streaming device and see what we said and what we did. So with that, I'll make a motion that we adjourn the meeting.
I'll second.
All in favor?
Aye.
Aye. Thank you all.